Remember what you were doing in 2000? Maybe you were worried about Y2K or watching the dot-com bubble inflate, but here's what you probably weren't doing: ignoring silver. And frankly, who can blame you? Back then, silver was trading at about $5 an ounce, quietly trading while the world was obsessed with tech stocks and the new millennium. Fast forward to December 18, 2025, and silver is trading at $66.21 an ounce. That's not a typo. We're talking about a 1,220% increase in nominal terms. Even if you factor in inflation and real purchasing power, you're still looking at a roughly 650% gain. Think about that for a second. If you had invested $100 in silver in 2000, you'd have over $1,200 today. But here's the thing. This isn't just another story about a commodity whose price has skyrocketed. It's the story of how a metal that was literally gathering dust somewhere in the back of people's minds suddenly became one of the most sought-after assets on the planet. And I'm going to tell you why 2025 was a completely insane year for the silver market. In such incredible detail, you'll think I'm making it all up. Let me paint you a picture of what silver looked like 25 years ago. In February of 2000, silver peaked at $5.57 per ounce. That was the high point. By November of that year, it had crashed down to $4.63. The year closed at $4.64. Silver was basically dead money. Why was it so cheap? Simple: supply and demand. China was dumping government stockpiles onto the market. Private investors were selling off their holdings. And here's the kicker: mine production was actually exceeding demand by about 20%. That's a massive oversupply. Companies like Kodak were still using tons of silver in their film products, but even that industrial demand wasn't enough to soak up all the metal floating around. The world was optimistic. The economy was booming. The internet was going to change everything. Nobody cared about boring old silver when they could be making millions on pets.com stock. Silver was the metal equivalent of that friend who never gets invited to parties. You know they exist, but nobody's thinking about them. Now, let's talk about what happened this year, because 2025 was absolutely insane for silver. And I'm not just talking about the price going up. I'm talking about market dynamics that haven't been seen in over 40 years. Stuff that made seasoned traders scratch their heads and say, "What the hell is going on?" In early 2025, silver was trading around $30 per ounce. Pretty good, right? People were happy. Then something started happening in the spring and summer. The price began climbing and climbing and climbing. By mid-October, silver had blown through $50 for the first time since 1980. On October 17th, it hit a record high of $54.48. But here's where it gets really interesting. On October 14th, during London trading, silver spiked to $53.55. And then, just for a moment, it kissed $51.24 in spot trading. This was the first time silver had genuinely broken its all-time high in dollar terms, not inflation adjusted, actual dollars. People went absolutely nuts. By December, silver was trading at all-time highs again, breaking through $64 and then pushing past $66. At one point on December 17th, it hit $66.52. The white metal was up roughly 130% year to date. To put that in perspective, gold was up 52%. Bitcoin had its own rally. But silver? Silver was the star of the show, beating everything. Okay, now I'm going to tell you about something that happened in October 2025 that sounds like it came straight out of a thriller novel. It's called the London Silver Squeeze, and it was one of the wildest market events in precious metals history. Here's what went down. London, which is traditionally the global center for physical silver trading, suddenly ran out of metal. And I don't mean they were running low. I mean the vaults were getting seriously depleted. Traders were scrambling to find physical silver bars to meet delivery obligations. It was chaos. How bad was it? Let me throw some numbers at you. There's this thing called the silver lease rate, which is basically the cost of borrowing physical silver in the London market. Normally, these rates sit below 1%. Maybe they spike to 2 or 3% during temporary shortages. On October 9th, 2025, the one-month lease rate exploded to 34.9%. Some reports even showed it briefly touching 39.2% in late trading. Think about that. 39% to borrow silver for a month. That's not normal. That's a 5-alarm fire in the middle of a hurricane. Bruce Ikemizu, who runs the Japan Bullion Market Association and used to work in precious metals banking in Tokyo, put it bluntly. He said, "Silver squeeze is on. This is serious." Why did this happen? Well, it's a perfect storm story. Earlier in 2025, traders were worried that President Trump might slap tariffs on silver as part of his Section 232 investigation into critical minerals. So what did they do? They started shipping massive amounts of silver from London to New York to get ahead of potential tariffs. Record volumes of silver got delivered into CME vaults in the US, like record-breaking amounts. But then, in the fall, demand from India just exploded. Indian buyers started sucking up physical silver from the London market like there was no tomorrow. Between the US stockpiling and India buying, London's available inventory got hammered, and suddenly there wasn't enough metal to go around. Here's my favorite detail from this whole mess. Traders actually started booking cargo space on transatlantic flights for silver bars. Let me repeat that. They were flying silver across the Atlantic. On planes. This is something that's normally only done with gold, because gold is so valuable relative to its weight. Silver? Silver is heavy and relatively cheap. Flying it makes no economic sense under normal circumstances. But these weren't normal circumstances. The price difference between London and New York got so big that it actually made financial sense to pay the insane cost of air freight just to move silver bars across the ocean. At the peak, London silver was trading about $3 per ounce higher than New York. That's a massive gap for a commodity that trades globally. The squeeze started easing by late October. Lease rates fell from that crazy 35% peak down to around 5.6% by the end of the month, but even that was elevated compared to normal conditions. The London Bullion Market Association, which basically runs the show for precious metals trading, started seriously discussing whether they needed to publish weekly silver inventory reports just so this kind of thing doesn't happen again. Now let's talk about why silver is actually valuable these days, beyond just people freaking out and buying it. Because there's a fundamental shift happening in how silver is being used, and it's all about green energy. Solar panels. That's the game changer. Every single solar panel that gets installed needs silver. Why? Because silver is the best electrical conductor at room temperature of all the metals. When sunlight hits a solar panel, you need to capture those electrons and move them as efficiently as possible. Silver does that job better than anything else. Back in 2014, the solar sector only accounted for about 11% of total silver demand. By 2024, that number had jumped to 29%, and it's still growing. According to BMO Capital Markets, solar is expected to consume 261 million ounces of silver in 2025 alone. That's a 5.5% increase from the previous year. But here's what makes it even crazier. The world added 380 gigawatts of solar capacity in just the first half of 2025. That's a 64% increase from the first half of 2024. To put that in perspective, it takes about 1.9 million solar panels to generate 1 gigawatt of power. So we're talking about over 700 million solar panels installed in 6 months. China is leading this charge. The National Energy Administration announced plans to add 160 gigawatts of solar capacity in 2025. India's got its own production-linked incentive scheme, aiming to add 25 gigawatts of solar module manufacturing capacity by 2026. Even Saudi Arabia, the oil kingdom itself, is building some of the world's biggest solar farms as they plan to get half their domestic electricity from renewable sources by 2030. Here's the math. Each solar panel contains about 0.64 ounces of silver. Multiply that by hundreds of millions of panels, and you're looking at hundreds of millions of ounces of silver demand just from the solar sector. And this isn't slowing down. If anything, it's accelerating. There's also a twist to this story. Newer solar cell technologies like TOPCon and heterojunction cells actually require more silver per panel than the older PERC technology. So even though manufacturers are trying to reduce silver content to save money, the shift to more efficient panels is partially offsetting those reductions. It's a constant tug-of-war between efficiency and cost. Solar panels aren't the only game in town. Electric vehicles are another massive driver of silver demand that most people don't think about. Your regular gas-powered car uses somewhere between 15 and 28 grams of silver, depending on the model. That's not nothing, but it's manageable. An electric vehicle? That number jumps to between 25 and 50 grams. Some estimates even suggest up to 1 kilogram of silver per EV battery pack, especially with newer technologies like Samsung's solid-state batteries that use a silver-carbon composite layer. The automotive industry uses approximately 80 million ounces of silver annually, and that number is expected to hit 90 million by the end of 2025. But here's the kicker. EV production is exploding. In the first 10 months of 2025, global EV sales were up 21% year over year. Research firm Gartner forecasts that the number of EVs on the road will rise by 30% in 2026, reaching 116 million total vehicles. And it's not just the cars themselves. EV charging infrastructure needs silver too. Data centers that support the whole EV ecosystem need silver. It's everywhere in the supply chain. The Silver Institute projects that automotive silver demand will grow at a compound annual rate of 3.4% between 2025 and 2031. And by 2027, EVs will overtake internal combustion engines as the primary source of automotive silver demand. Now, here's where things get really interesting from a market perspective. All this demand we're talking about, there's not enough supply to meet it. Not even close. The silver market has been in a deficit for 5 consecutive years. That means more silver is being consumed than is being mined and recycled. In 2025, the deficit is projected to be 95 million ounces, according to Metals Focus. The Silver Institute initially forecasted 149 million ounces, but revised it down due to slightly higher supply and some demand softness from high prices. Here's the cumulative picture. From 2021 to 2025, the silver market has racked up a deficit of almost 820 million ounces. That's an entire year of average mine output just gone. Since 2010, the cumulative deficit is over 580 million ounces. And it's not like mines can just ramp up production overnight. Silver mine production actually peaked way back in 2016 at 900 million ounces. Since then, it's been declining or stagnant. In 2024, mines produced 819.7 million ounces, up less than 1% from the previous year. For 2025, production is expected to stay roughly flat at 813 million ounces. Why can't miners just produce more? Because about 75% of silver is mined as a byproduct of other metals like lead, zinc, copper, and gold. You can't just decide to mine more silver. You have to be mining these other metals, and if they're not economically viable, you're not getting the silver either. Plus, ore grades have dropped by about 20% over the years, meaning you have to move more rock to get the same amount of silver. So what happens next? Where does silver go from here? Well, the forecasts are all over the place, but they're mostly bullish. Citigroup predicts silver will reach upwards of $70 per ounce in 2026. Bank of America is calling for a peak of $65 with an average of $56.25. Wisdom Tree sees $56 by 2026. More conservative estimates from HSBC put it around $50 to $53. But then you've got the really bullish calls. Peter Krauth of Silver Stock Investor sees silver as relentless and expects the tightness to continue. Clem Chambers of anewfn.com calls silver the fast horse of precious metals and thinks it could hit $100 in 2026. Frank Holmes also sees a realistic path to $100. Larry Lepard of Equity Management Associates told the Investing News Network he sees $75 by mid-2026 and $80 to $90 by year-end. Robert Kiyosaki, the Rich Dad, Poor Dad author, has been pounding the table on silver all year. Back in June, he predicted silver would explode in July. In September, he said a $100 investment in silver could turn into $500 within a year. He's been calling silver the most attractive asymmetric buy available, meaning huge upside potential with limited downside risk. Whether you believe him or not, the guy's been right about gold hitting his targets, so people are paying attention. The technical analysts are also getting excited. The measured move from silver's decade-long consolidation pattern points towards $72 and $88 as realistic upside targets. Some are even suggesting that if current momentum continues, we could see silver in price discovery mode with no meaningful technical resistance until it hits those levels. Here's something that flew under the radar for a lot of people, but is actually huge. In 2025, the United States officially designated silver as a critical mineral. This isn't just some bureaucratic label. It means the U.S. government recognizes silver as essential to national security and economic interests. Why does this matter? Because it puts silver in the same category as lithium, cobalt, and rare earth elements. It means there's going to be policy support for domestic silver production. It means strategic stockpiling might happen. And it means that in any future trade disputes or conflicts, silver is going to be treated as strategically important. This designation played into the whole London squeeze situation I talked about earlier. Traders were worried that silver might get caught up in Trump's tariff policies precisely because of its new critical mineral status. That fear drove a lot of the precautionary stockpiling in U.S. vaults. There's this thing called the gold-silver ratio that precious metals people obsess over. It's simple. How many ounces of silver does it take to buy 1 ounce of gold? Right now, as of December 2025, that ratio is sitting around 78 to 87, depending on when you check. Back in April 2025, the ratio was over 107. That meant it took 107 ounces of silver to buy 1 ounce of gold. By October, it had fallen to 78, the lowest since July 2024. That's a massive move. And it suggests that silver is starting to close the gap with gold. Historically, when this ratio gets really stretched, it tends to snap back hard. And right now, even at 78, it's still elevated compared to historical averages. Some analysts think the ratio could fall to 70 or even lower if silver keeps outperforming. What does this mean in practical terms? It means silver still has room to run compared to gold. Gold's been making new all-time highs all year. Silver only recently broke its 1980 record. There's a catch-up trade happening. And if history is any guide, silver tends to be more volatile than gold on both the upside and downside. Let's talk about investment demand, because this is where things get really interesting for 2025. Exchange-traded products backed by physical silver, the ETFs, saw absolutely massive inflows this year. Through November 6, 2025, silver ETP holdings were up roughly 18%, generating a year-to-date rise of 187 million ounces. That's institutional and retail money flooding into silver at a pace we haven't seen since 2020. Why are investors piling in? Multiple reasons. Stagflation fears, concerns about Federal Reserve independence, worries about government debt sustainability, questions about the U.S. dollar's role as a safe haven, and general geopolitical risks. Silver checks a lot of boxes for people worried about the financial system. Julia Kandoshko, CEO at the broker Mind Money, put it well. She said, "Right now, the market is characterized by real physical scarcity. Global demand is outpacing supply. India's buying has drained London stocks, and ETF inflows are tightening things even more." Roughly half of all silver-backed ETPs are held in London, which is part of why that October squeeze hit so hard. When you've got physical scarcity plus massive investor demand, you get the kind of explosive moves we saw this year. Interestingly, physical bar and coin demand in the US was actually down for part of 2025 as some investors took profits. But that was more than offset by buying in India, Germany, and Australia. Indian investors in particular bought into rising local prices, expecting even more upside. It's a self-reinforcing cycle. Silver has this nickname in trading circles, the devil's metal. And after watching 2025 unfold, you can see why. This stuff is volatile with a capital V. In a single week in October, silver swung from $51 down to $47, then back up to $53. $2 moves in a day became normal. The metal would gain 4% in a session, then drop 3% the next day. It was a roller coaster. This volatility is both silver's blessing and its curse. On one hand, it creates opportunities for massive percentage gains that dwarf what you see in gold. On the other hand, it can shake out weak hands and cause panic selling. The devil's metal indeed. Part of this volatility comes from silver's dual nature. It's both a precious metal and an industrial commodity. When industrial demand expectations shift, the price moves. When investment sentiment changes, the price moves. And when both happen at the same time in the same direction, you get these explosive rallies or brutal corrections. Here's something that could potentially slow silver's rise, what the industry calls thrifting. It's exactly what it sounds like. As silver prices go up, manufacturers try to use less of it. Solar panel makers in China and India are actively working to reduce silver content in their cells. They're experimenting with copper metallization and other alternatives. The problem is, silver is just so damn good at conducting electricity that substitutes don't work as well. You end up with less efficient panels. In 2009, each solar cell required 521 milligrams of silver. Today, it's down to about 111 milligrams. That's impressive thrifting. But here's the thing. The total number of solar panels being installed is growing so fast that the absolute amount of silver consumed is still increasing dramatically. The Silver Institute and Metals Focus both acknowledge that thrifting is happening, but they don't see it as a game changer. At $30 an ounce, sure, manufacturers will look for alternatives. At $50 or $60, they'll look harder. But the technology transitions take time, and demand keeps growing faster than substitution efforts can keep up. Some analysts think that if silver really does hit $100, we might see more aggressive substitution efforts. But even then, you're talking about a multi-year process to retool manufacturing and prove out new technologies at scale. So where does this leave us? Silver closed December 18, 2025 at $66.21 per ounce. It's up over 100% year-to-date. The supply deficit is real and ongoing. Industrial demand from solar and EVs is structural, not cyclical. Investment demand is strong. Geopolitical uncertainty isn't going anywhere. The case for higher silver prices in 2026 is built on some pretty solid foundations. The deficit isn't going away. Mine supply isn't ramping up quickly. New technologies keep finding uses for silver, and the monetary environment, with rate cuts expected from the Federal Reserve, is generally supportive of precious metals. Are there risks? Of course. A stronger than expected US dollar could weigh on silver. A global economic slowdown could hit industrial demand. Rapid disinflation might reduce silver's appeal as an inflation hedge. Technical corrections after a 100% rally are normal and healthy, but the structural story is compelling. We've gone from the year 2000, when silver was forgotten and oversupplied, trading at $5 with nobody caring, to December 2025, where it's a critical mineral, trading at all-time highs with supply deficits stretching as far as the eye can see. The world of 2025 is fundamentally different from 2000. Back then, silver was industrial waste from photography and not much else. Today, it's the backbone of the green energy transition. It's in every solar panel, every EV, every data center cooling system, every advanced semiconductor. The world runs on silver now, whether people realize it or not. From $5 in 2000 to $66 in 2025. From oversupply to structural deficits. From forgotten metal to critical mineral. Silver's journey over the past quarter century is one of the most dramatic transformations in any commodity market. The year 2025 will be remembered as the year silver broke out. The London squeeze, the record lease rates, the flights full of silver bars crossing the Atlantic, the all-time highs, the 100+% gains that beat gold, Bitcoin, and the stock market. And if the analysts are right, if the supply deficits continue, if solar installations keep breaking records, if EVs keep taking market share, then 2026 might be even more interesting. The $70 level is in sight. Some are calling for 100. A few extreme bulls are talking about 150 or 200 in the next few years. Whether those targets hit or not, one thing is clear. Silver is no longer the forgotten metal gathering dust in the back of people's minds. It's front and center in the global transition to renewable energy, the electrification of transportation, and the digitization of everything. And that's a story that's just getting started. The question isn't whether silver matters anymore. The question is whether there will be enough of it to meet the demand that's coming. And right now, the market is screaming that the answer is no. What do you think about silver's incredible run in 2025? Are you watching the market? Or have you already taken a position? Drop a comment below and let me know your thoughts. And if you found this deep dive helpful, hit that subscribe button to stay updated on major market moves and analysis. The story of silver is far from over, and you won't want to miss what happens next.